Hey guys, Doug the Retirement Guy here. 3 ETF funds that pay 15.5% total return. You need to look at these to see if you want these in your retirement account. That's what we're going to talk about today. First thing I want to do is thank everybody who's joined the Patreon support. We are really appreciative of it. We're adding new people every day. So we want to say thank you to each and every one of you who supported us through the Patreon. If you want to join in, click down below in the description and you'll see the link to the Patreon. Thanks again. Let's get into today's video. Well, first off, the goal of retirement account is investments to grow, income for your investments, and then the big important one is to relax and be free and worry-free of everything. That's what you want to have in a retirement account, and that's what we try to achieve when we put these together. So picking our ETFs becomes down to this. The first ETF that we picked gives you a 10.7% growth rate, a 3.28% dividend growth, and it's only a 67 rating on Morningstar, so it puts it into the aggressive category. The second ETF that we get into play has an 11.89% growth with a dividend payout of 3.36%. And it only goes to a 68% aggressive growth. The final ETF, number 3, has a 13.22% growth rate and a dividend paying of 3.03%. And it only goes up to a 70, staying inside of the aggressive growth that Morningstar rates. So overall, your average would be 11.59% for growth and 3.23% from dividends, which basically puts you about a 14% total growth of your fund and staying only at the 68%, which keeps you an aggressive in the Morningstar rating. Now, taking our retirement fund of $500,000, which is very, very common in the marketplace today, our first ETF fund would grow by $17,800 and pay a dividend of $5,400. Our second ETF fund would pay a $19,800 growth and a $5,500 a year dividend payment. Our third ETF would grow $22,033 in growth and have a $5,066 a year dividend payout. This would give you a growth rate of $59,683 just from growth and a guaranteed income of $16,149 from dividend payments. So our first ETF is Federated Hermes U.S. Strategic Dividend ETF, better known as FDV. Now, the fund pursues its investments objective by investing primarily in high dividend paying common stocks of U.S. issuers with dividend growth potential. The advisor intends to invest exclusively in the U.S. issuers, and it's all basically based in the U.S. market and exchanges. Generally, they're investing in large cap and mid cap stock periods. The nice thing I like about this one is they're doing it what I call the old-fashioned way. They're investing money to clean stocks that will have good growth with a dividend payout instead of trying to do the old-fashioned, I call it the old-fashioned or the new modern way of making money, is by selling covered calls and all that. So when we put this into our calculator to verify what we're seeing, well, in 2024, that stock was $25.28. In 2025, it's up to $27.98. So that is a $17,800 increase or a 10.68% growth in the value of that stock. Now, they pay 92 cents a year in dividends, which gives you that $6,000 or 3.64% return. So these numbers are very, very solid from what I can see. This fund is only 2.5 years old, but I believe just from what we've seen so far, they've been able to handle the downfall we've had in the past 3 months. They've been able to handle growing their funds. And the nice thing I saw this was their expense fees were only basically 0.5%. Our next ETF is Invesco's S&P 500 High Dividend Low Volatility ETF, or known as SPHD. Now, Invesco's S&P 500 High Dividend, the fund is based on the S&P 500 Low Volatility High Dividend Index. The fund invests at least 90% of its total assets into common stocks that comprises the index. It maintains and calculates the index, which is composed of 50 securities traded on the S&P 500. So this thing really is going for, again, the higher dividends, the low volatility, but investing again, buying into stocks and making things happen. So again, we invested 1/3 of our funds into this, and you can see in 2024, the price was $44.40. In 2025, it's up to $49.68. That gained us $19,819.82, or an 11.89% growth in our share value. Add in the extra dividend that pays $1.67. We've got another $6,265 or 3.76% dividend on top of that. Now, this fund has been out for 13 years. So it's seen a lot of ups, downs, sideways, and it's been producing throughout these numbers. Best of all, it's only got a 0.3% expense fee. Our final ETF is the ETC SIXA Meridian Mega Cap Equity ETF, better known as SIXA. Now, this fund invests 80% of its net assets plus any borrowing for investment purposes into mega capitalization equity securities. Basically, what they're doing is they're buying the largest 10% of the stocks that are included in the Russell 3000 index for market capitalization. The equity securities in which they invest in are mainly common stocks and funds that are not diversified. So again, another one of these stocks that's doing it the old-fashioned way, investing money, expecting returns, and doing their homework. This fund, again, 1/3 of the money went into this. In 2024, 41.08 was the price of the share. In 25, it was $46.51 for a gain of $22,030 or 13.22%. Now, when we get to the dividend, it pays $1.41 total dividend. That means this fund would have $5,715.68 or 3.43% in dividends alone. That's going to give you over a 16% return just in this one fund. Now, the positive is this fund is been out there since 2007, so almost 18 full years that this fund has been out there producing. The other nice thing is the expense fees are only 0.48%. So our retirement fund of $500,000 basically breaks down to FDV, giving you that $17,800 in growth and $6,000 a year in dividends. SPHD paying you $19,819 in growth and an additional $6,265 a year in dividends. And SIXA, $22,000 in growth and $5,700 a year in dividends for a grand total of $59,650 or 11.93% return on your investment, plus an additional dividend of $18,041 or 3.61% total. So when we look at the summary of all this, the investment to growth, we're gaining 11.93% from these three funds. Income from your investment, 3.61% from the dividends alone. And you're worry-free so that you can relax. You take the $59,000 from growth, the $18,000 from dividends, that will give your fund from just 3 ETF funds $77,691 of cash growth, or 15.54% from your $500,000 in funds. This is a simpler and easier way that you're working off of growth versus living off of dividend incomes. So at the end of each year, you can rebalance your fund, take the money out you need, take the dividends, put them in your pocket, grow your funds to where you want it to be, and continue on year after year. This is how you're going to get rich into the future. Guys, I think we did it. If you like what we're doing, give us that thumbs up. It helps the channel every which way you do it. Hit the subscribe button. Don't miss any of our videos that we put out there trying to help you do this in retirement periods. Also, if you have any comments, good, bad, or ugly, put them down below. We read each and every one of them, and we will respond. And best of all, if you really want to support the channel, go down in the description, hit that Patreon button. Guys, it is simple. It's up to you. You want to give us a Coke to give us the caffeine to keep us going? Buy us a Coke. You want to join the club? It's $5. Join in. It's all what you need it to be. Everything helps grow the channel. Thanks again for watching.